Thank you very much for joining us right here on the show. As India's largest lender, as India's biggest banker, it's only fair that I talk to you about a concern that there is in the markets, a concern that there is in the system, which is the liquidity concern. How real is the liquidity concern at this point in time? Because there are people who believe it's very real and it should be acted upon, and there are those who kind of dismiss it.
So as far as liquidity is concerned, overall liquidity we look at, even if we look at the call rate, which is in the corridor of the repo rate. It has not gone beyond 6.50%. Overall liquidity from the system, I won't say there is a major concern, but what has happened that the corporates which were placing lot of liquid funds with the mutual funds, they have withdrawn the money. And that is where there was a redemption pressure on the mutual funds. And mutual funds are big investors in NBFCs.
True, true.
Short-term paper. From there, the rollovers of CB, where mutual funds were investors, so there are some of the companies, not all. Many of them have been able to roll over. Only one or two companies are there which may be finding it difficult to roll over. But otherwise, the liquidity with the mutual funds, it definitely needs an improvement because the reverse flow which has started with the corporates withdrawing, I think that money needs to come back, or some liquidity support if it comes from, say, either from the Reserve Bank of India, then it may help the sector to give the confidence. And this will, all this rumor mongering which is going around, it can set to rest all that speculation.
There are those who say that the markets don't need liquidity, they need tranquility, and this rumor mongering should stop. But I will ask you a question that some people have asked, you've clarified, but just for the benefit of our viewers here, SBI recently hiked the buyout limit for NBFCs to nearly 45,000 crore rupees. Obviously, the markets would want to know the rationale, but as a journalist, I should ask you, is this your decision? Is this the government arm twisting you? Because this is a liquidity boosting measure.
No, like in everything, you cannot see the hand of the government.
The unknown hand.
State Bank, we have independent board, we have independent management, we have a business plan. And if there is a situation where we see an opportunity, we can always revise our business plan. And when State Bank was not growing, then there was concern that they are not growing. When we see an opportunity to grow and take some decisions, and then if the market sees the hand of the government, it is not fair to the management and the board of State Bank of India.
Fair point. Fair point. I agree with you there that you can't be blamed either which way on both these counts. But while you are saying growth, are NBFCs going to and HFCs finally going to cede space for banks like yourselves and many other lenders to grow at a more
Some
robust
balancing
pace?
of the portfolios is bound to happen.
How much?
No, that is very difficult to predict. But the growth, if you look at the NBFC portfolio growth, in the last 2-3 years, it has been very high. Banks were not growing at that pace.
Precisely.
Within the banks, private sector banks were growing at a very high rate of growth and almost identical to NBFCs. It was the public sector banks, because there are two challenges. One was the management bandwidth itself, which was more focused on the resolution of the state assets and NPAs.
Yes.
Most of the management time and attention was focused on the resolution of these assets. And second was many public sector banks, 11 of them, they are under PCA. So obviously what happened that there was a vacuum which was created by the absence of lending by the public sector banks, and that is the void which NBFCs filled in to a large extent, and private sector banks also seized upon that opportunity. Now we need to come back. And that's what we are precisely doing, and that is the opportunity, and that is the opportunity to lend fresh, and there is an opportunity to buy back the portfolios from NBFCs also.
Fair point. I will ask you a question as a banker and as India's largest banker. There is a lot of fear in the market still that there seems to be an asset liability mismatch as far as NBFCs are concerned. This is a big asset bubble waiting to burst and all of that. From where you see this, how wide and how deep are the risks? And, people have referred to accounting frauds and things like that.
So one is about NBFC, it's a very wide, right? In NBFCs, you include even HDFC.
That's right.
You include LIC Housing Finance, you include PNB Housing Finance, endless. You include Power Finance, REC, HUDCO, everybody comes
Precisely,
under
yes.
NBFCs. So the problem is not with this sector as a whole.
True.
Second is, there is not much of an issue with the underlying assets and recovery.
Okay.
There may be an exception, right? Because I have also not scrutinized all the 4,000 plus NBFCs
Fair
in the
point,
market.
fair point, yes.
But we finance more than 100 of them. Many of these we buy portfolio. We know that what is their quality of portfolio,
Assets and
how is it performing. That itself is an indicator. And based on that, I don't feel that it is a systematic problem. The underlying assets seems to be performing. But yes, asset liability mismatch, where they are lending long term and the funding is coming from the commercial part of the market.
Yes.
So depending upon the NBFCs, ALM itself, which differs from company to company.
Yes.
So we cannot generalize that all NBFCs have ALM problem. No, not all NBFCs.
But there are
have
few who do.
There may be. There are, not even I wouldn't use the word are, but there may be few which need to address this. And the asset purchase program, or where we said that SBI will buy the portfolio, and subsequently even Bank of Baroda, Punjab National Bank, Union Bank of India, they have also announced that they are willing to buy the portfolio.
Taking a cue from you, yes.
So that will address this issue of mismatch also.
Which may exist.
Which may exist.
Fair point. Sir, you know, this entire situation has given rise to a very strong vocal debate about regulating NBFCs, more stringent rules coming in. We've been speaking to ex-central bankers and bankers like yourselves. Does this need a more nuanced approach? Because there are NBFCs that accept deposit and they need to be in a different sort of a regulation versus those who don't. What's your personal view on this?
No, NBFCs, they play very significant and they have quite a few of them, they have done well in the SME space, in the affordable housing space, in overall meeting the credit requirements. So, a strong regulation, there should not be any regulatory arbitrage in my view. Okay. If banks are strongly regulated, so is the need for a strong regulation as far as NBFCs are concerned.
Correct.
And any NBFC which goes down under or has problem, it can create a systematic risk. So that's why I would recommend, or my strong view is that NBFCs need to be regulated at par with which a bank would be regulated.
That's a strong word of advice, and I'm presuming regulators and policymakers will play heed. But let's address the elephant in the room, and that is IL&FS. I think it has triggered a lot of debate. It has triggered a lot of fear in the markets. Was this a systemic risk potential institution that had to be rescued? Let's first address the basic question.
I think in my previous question I have already answered that any NBFC, because they are part of the system and it is not related directly to that particular thing. Even if IL&FS, if you look at their balance sheet size, it is just 90,000 crores of liability. And in two large NPA accounts, the banking system is sitting on the same amount of NPA.
Yes.
So that's why NBFCs have to be treated differently as far as the any issue about their capability to repay is concerned. So that's why like the treatment of any NBFC and the regulation, because they are part of the system and irrespective of the size, they can cause problem. That's why it is very important that 100% they work well, operate well, and are able to meet all their commitments.
But sir, at one level, and I'm really being very pro banks, but I'm still asking you a question. At one level, don't you think IL&FS kind of an NBFC has been given a very long rope? Banks lend to infrastructure, and when that fails, you are culpable, and the whole NPA thing happens. As far as IL&FS kind of a company is concerned, hasn't it been given too long rope? NHAI is being made to pay. The government's getting a new board, to function. I'm just asking. From a banking point of view, that's a little bit of a stepmotherly treatment, if I may.
No, I won't. I don't agree with your analysis, honestly, because if you look at the project funding, so project funding, any of the projects of IL&FS, if they are not paying, then they would be classified as NPA.
That's true. Yeah.
So there is no special dispensation. So all SPVs, suppose I have financed 13, 14 of them, and if anyone is not performing as part of the project funding, so there will be a default and the account will be put under SMA 0, 1, 2, NPA, whatever is the asset classification.
Precisely,
So no special dispensation is available. Now if the borrowing is at the holdco levels, then it has to be treated again as per the IRAC norms. And when the default is started occurring, so obviously those particular holdco or SPVs of ILFS, so they have to be, the asset classification for them has to be as per the normal asset classification. Now the question is about the resolution, that how do you resolve? So an industry or any other account, their approach to resolution and the approach to resolution of ILFS, that cannot be on the same footing. And I strongly feel that whatever government did, that was what needed to be done. And now with the new board in place, so there is a much more confidence in the market itself. And as far as resolution is concerned, so the board has to prepare a resolution plan, and then when the resolution plan is ready, then people will act on that resolution.
Well, will you indulge me on one last question of ILFS before I move to IBC and the NPA resolution? It has been said, and you were at the IMF summit, and so was I got hold with Mr. Y.V. Reddy, former RBI governor, and he said what happened with ILFS is one issue, and the RBI should look at it, and there should be regulatory oversight on that. But what needs to be deeply looked into is that how was LIC and HDFC and SBI all present there? These are systemic risk potential companies. What is their risk control mechanism, and that needs to perhaps be scanned further. Do you agree with this, and how would you defend your position in that sense?
No, like we bought this equity way back in mid-90s, and we are 6%. Of course, LIC is 25%. Sure. So the dynamics of the board, forget about ILFS, let us not discuss ILFS.
Sure. Yeah.
In any board, there are independent directors, there are whole-time directors, and there are nominee directors. And in the board, the proposals come, the matters come for discussion. But now, if there were certain questions raised on the proposals which came to the board, I am very sure that the nominee directors have taken note of that. Whether everything is public or not public, that is a different matter. But the responsibility of the board is the same which is for any other company where there are problems.
So you don't believe there are risk control mechanism that needs to be perhaps reviewed of banks like yourselves just yet?
No, when I take an investment decision, when I invest in a company, so I have an investment policy. So at that stage we control. But for any board member in any company,
what happens from there on?
So what happens there on? And
is the big question.
This is a question, and this is not a question about ILFS alone. This is a question for which can be asked for
any board that you're present.
For any board you are present.
Okay, fair point.
So that is like you can't treat ILFS board differently
from any other board.
So whatever is the responsibility of any board towards corporate governance, whether whatever agenda items came, whether the right questions were asked or not, that will be all subject matter of record and will be part of the minutes. But in any company, I am not defending ILFS position X, Y, Z.
Sure, yes.
The responsibility of the management and the whole-time directors
of course, can't be taken away.
Definitely much more. If today in State Bank of India also, if I decide as chairman that I will not bring certain matters to the knowledge of the board, and later on the board of SBI is blamed, so how?
Sure.
So what is the ways and mechanism for the board members also? But if they have not asked the right questions, which need to be asked when the agenda item comes to the board, then definitely they are responsible and accountable for that.
Precisely, and they will perhaps answer questions. Let's turn focus, and you've spoken about this just a few days back. Is the worst of NPA behind us? And the reason I'm asking you this question is because I think a lot of people are wondering, every quarter we hear the worst is behind us and then something else comes up. But how many more painful quarters of provisioning till we say things will begin to soften from here.
So
and I think your word on that will count because you are the largest lender.
But my word is that I have stopped saying that worst is over.
Okay.
Because.
But how many more quarters of painful
what I
provisioning?
Is, and I'm telling you more from State Bank perspective.
Sure.
Because I have a better idea about State Bank. Because each bank's lending practices may differ. That the NPA recognition, it has happened in the last year. March 18 was the peak.
Okay.
And after that, we have started seeing the declining trend in the new NPA formulation.
Okay.
And that is what I believe will continue.
That will be the trend from here on.
That will be the trend. Second is about the resolution. So there are many resolutions which are in very advanced state. And if we are able to recover our money within this quarter itself, that may make a huge difference. These 2 quarters means December and March.
Fair point.
September is already over. And the third aspect is the provision coverage ratio. In last 1 year, June 18 to June 17, all banks have increased their provision coverage ratio. The State Bank of India, we have increased provision coverage ratio by 1100 basis points. So to that extent, our PCR, provision coverage ratio, is very close to what we estimate the loss given default. So we are more or less aligned to that. So the pressure on the enhanced provisioning, it comes from the aging of many assets, and if there is a gap in the security. So
but
this
you believe the heightened thing has kind of weathered
can
off.
happen, and in September quarter or maybe in December quarter. By December quarter, I think the resolution, slower NPA accretion, and the increase in provision coverage ratio. So the balance sheet as on 31st December 2018 itself should be looking much better than what it is today. We should never worry or should discuss is what happens within the quarters.
Fair point. I agree with you, and I think the markets will take a lot of respite from what you just said as far as the NPA position and resolution, accretion of new NPAs is concerned. But, you know, there is this new debate of sorts, and I will just ask you a quick question on this, that is taking a haircut or is a write-off akin to a loan waiver? And there is this debate and everybody's kind of adding to this. SBI has said that it expects 30,000 crores this fiscal from the IBC process. So 2 questions there. Are you on track, or could that number actually be higher, given that there is a lot of interest that's coming on some of the resolutions that are on the table, whether it's SR Steel or Bhushan, and also, you know, the write-off versus the loan waiver debate that.
So what is to be differentiated when we talk about write-off? I'll take an example that suppose Bhushan Steel, because it is done.
Yes.
Lenders recovered about, I think, 72% of the outstanding.
Yes.
So 28% is a write-off because there is no further remedy left.
Fair point. Yes, to recover that money.
To recover that money. That is a real loss which has to be taken. But for the balance sheet management purposes, many banks, if we were holding say 50-60% provision in Bhushan Steel, and that account we had taken to what we call under advances, under collection account, OCA, or a technical write-off, that amount is not a write-off. In bank's book, what effectively bank does, that gross NPA is, suppose in our case in Bhushan Steel was 10,000, if I have having a provision of 6,000 crore, so net NPA is 4,000 crore.
True.
When we transfer this 6,000 crore to an OCA account, my net NPA position still remains 4. Isn't it?
And that gets hedged.
And after that 4, I have recovered 1,000 crore extra.
True.
Right?
Yeah.
So then this 3,000 crore, for which I have no more remedy left,
is the write-off.
Is the write-off. And that is where it is
it's different from a waiver.
Of a waiver. So
Fair
now
point.
if somebody says that this 3,000 crore you should have not written off your books,
but then there's no way to resolve it.
There is no way to resolve it.
Yeah, you
so
can keep
through
going
IBC process, through a transparent price discovery, through a process, through a court adjudicated process, or even for even if it is not a court adjudicated, it is a OTS, compromise, sale of asset. So whatever is the security available, whatever is the cash flows or the potential cash flow available, you recover an amount, and when you have exhausted all your recoveries, options, whatever you want to recover, you have recovered. And then whatever is the remaining amount you are unable to recover, or there is no possible way of recovery, then you remove it.
Fair point.
So that is where this distinction
is important.
And is very important.
No, I don't think there's any denying that. But 30,000 crore, is that figure likely to go up this fiscal?
It should go up, but 30,000 crore is still our very reasonable estimate given the accounts where the resolution is in sight. It is just like that you have a very ripe fruit, but you can't eat it. So we are waiting for that opportunity.
So when you wait for that opportunity, and one of the big opportunities is SR Steel, I'll just specifically ask you a question on that. There seems to be so much interest in SR Steel, from an ArcelorMittal to the Russians to now the JSW throwing its hat in the ring, so to say. I'm not going to ask you if you have a clear preference, obviously, but how does this now, this interest impact resolution? Because now the courts have gotten involved, it's no longer the first bid that has come in. So how does this impact a resolution process like this? Because I'm presuming bids will be a lot higher.
So basically whatever Supreme Court has ordered, there was a judgment issued on 4th of October. So all the people involved in the process, including the Committee of Creditors, they will have to comply verbatim by the Supreme Court order. And in that order, one thing which Supreme Court has ordered and which has far-reaching consequences is what the Honorable Court has said, that any challenge to anything, any resolution process, should happen only when the resolution plan has been submitted to NCLT for adjudication.
Fair point. Okay.
So which is, I think, which sets a lot of things right. And wherever there is any attempt by any of the vested interest to delay the process, I am hopeful that with this very clear order of the Supreme Court of India,
there will be resolution.
There will be resolutions which will be faster, and this attempt to delay the process will be controlled.
If I may ask you, while we are talking on the Supreme Court, the power companies have got some respite from the court. I know you were fairly aggressively looking at resolution there. How has that impact been in terms of resolving those NPAs, because now the courts have stepped in, giving some respite?
So that effort is continuing.
That's a very cryptic answer. I'm going to expound upon that. So that effort just continues.
It continues.
Okay, what about the JP case, sir? Because the home buyers are not on the same page with either of the parties, no resolution in sight, you've got a big exposure there.
Okay, specific case, I think we have to.
Fair point. Let's just turn focus now, and I do want to talk to you about one important thing on the IBC. There has been a change made in which operational creditors are now at par with the financial creditors, the secure creditors. Isn't that unfair? Because you've got money at stake.
I don't think that is the right understanding.
If you can explain that for our viewers.
So they have not been made at par. What the process says is that if there is a resolution plan, in resolution plan, the resolution applicant, they will give a plan that how will they settle the financial creditors, how will they settle the unsecured financial creditors, what will be the payment amount to dissenting creditors, what will be the amount payable to operational creditors. So what the process has said, that when the payment is received, then the operational creditor will need to pay first.
So it's not as if they are at par with the financial creditors, because that's the wrong understanding then. Sir, while the NPA resolution was on and while this IBC has been in place, and for the right reasons, both from a regulatory oversight and from the government's point of view and the banks, you've put in very stringent norms in terms of forensic audits and things like that. Is that impacting credit offtake? Are bankers more hesitant now, because there's just so many guidelines to now suddenly meet?
But the last figures were 12.5% credit growth.
But that's perhaps also a sign of utilization going up and things like that.
So credit growth is happening.
So it's happening despite these problems, and that kind of answers. The RBI in its last policy decided to maintain status quo, much to everybody's surprise. What will that mean for lending and deposit rates going forward? I think that's a question.
As of now, I don't think there is any. One thing is certain, which RBI has made it very clear, that rates are not going to go down.
Absolutely.
That
it's calibrated tightening. It's calibrated tightening.
So that is what is mentioned in the monetary policy. But as of now, when we speak today, the things seem to be stabilizing both on the Brent crude pricing, the bond yields, the currency rates. So if we are able to maintain this stability, then I think there should not be any concern about any upward movement in interest rate.
So is it an obvious question then to ask that your treasury impact, given now you're saying that things are stabilizing, things were very volatile at least in the last 1.5 months. So
right. So whatever, like treasury impact, we did a mark-to-market provision, and we in the State Bank of India again took the entire hit in June quarter, and September whatever is the mark-to-market provision, that will also have to be done, and in December, if we do it at whatever is the rate, 8.02 or 8.03. So if yields are lower than that, then we gain on mark-to-market provision. If yield is higher than that, we will again make.
But in your view, things are stabilizing now?
It seems so, yeah.
The bank recently sold 4% stake in the general insurance business, and that's in line with your non-core asset sale. How much more is likely to happen in this financial year, and the rights issue that keeps getting talked about in the markets?
We never talked about rights issue. And a small parcel sale for SBI General. So that is a part of the process where we intend to list it in the next quarter. And we have identified a few more assets where we will be going through the similar process.
Okay.
And we will announce when the timing is right.
You have been on record to say that SBI is no longer the right candidate for looking at any bank consolidation. You've done your bit with your subsidiaries, and I think it worked for you because you had the same technological platform and all of that. But the government seems to be pushing bank consolidation. Do you still stick by the fact that we're not taking any more?
I still stick to that because merging 6 banks is not a joke, and I have to see its benefit now. Coming to the merged entity, which is State Bank of India, 5 associated, Bharatiya Mahila Bank, and SBI, time and again I have said that in terms of size also, we are a decent, domestically, systematically important bank, and there should not be too much concentration of power in the State Bank of India.
You were talking very contrary to concentration of power. 2 last questions, sir, and one of them has to be on this whole effort to merge banks, a weak bank, a stable bank, a small bank and a stable bank. Is this the right way to go forward? Many people will ask. This is not decision that's emanating from the boards of these banks. This is really coming in from the government at one level, looking at stable banks. But is this the way forward?
This was the recommendation made in 1992. So it is almost how many years? 26?
26 years.
26 years.
And
so somewhere you have to make some beginning, because 21 banks, public sector banks, there are too many.
Don't need to exist.
No need for 21 banks. We need a couple of strong, large public sector banks. Because the economic growth in this country, and as well as the social banking objectives, we will need public sector banks. But do we really need 21? And if we don't need 21, then somewhere the beginning has to be made.
And if it's not coming from the banks themselves, then let it come from the
ultimately, like government also is the majority shareholder.
I will ask you a quick last question, and this one doesn't have to do with public sector lending, and it doesn't have to do with State Bank. It has to do with what we are seeing in the private banking space, and you can't be diplomatic here. We've seen issues at ICICI, we've seen issues at Yes Bank and at Axis. And one of the commonality there is that while PSU banks are sometimes criticized for tenures of their chiefs being very short, here perhaps the tenures are way too long, and which is what is causing the problem. Do you believe there is regulation that's required in terms of fixing a tenure even for private sector banks?
So you are now talking about the
other side.
Other side.
Yes.
Means not too long tenures.
Not too long tenures, yeah. Because if you actually look at the problems, many of the problems are arising, and SBI is raising an issue, RBI is raising an issue because they believe that the tenures are way too long. And I mean, is there merit in the argument? Your smiling is not going to give me an answer, so you have to give me a concrete answer there.
I will give you the answer which I believe is the right answer. One is that many times I have said that as far as corporate governance is concerned, it has to be ownership neutral. There are good companies in public sector space, and there are bad. And same is true for the private sector. Let us forget about banks in general.
Sure.
So corporate governance is ownership neutral and should be ownership neutral. That is the first thing.
Fair point.
And second is that whether the long tenure itself needs to be curbed. So I have not applied my mind. to
But do
this.
you believe there is a merit in that argument being made?
So I think that at some point of time, the job rotation is a good practice.
On that note, sir, thanks very much for speaking to us. Pleasure.
Okay.